Well, it was a wild day on Wall Street yesterday. The Dow Jones Industrial Average moving more than 450 points intraday during the session. It's the highest intraday swing, the biggest one in 8 weeks. The Dow ending the day with a loss of 165 points. So what's behind that volatility and what's going to happen going forward? Joining me now, Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management, and Michael Lee, principal at Investmark Advisory Group. Welcome to you both. Great to have you. Doug, let's start with that volatility. Huge move intraday. It's like the market can't make up its minds. What is behind this? And do you think it continues?
I do think it continues a little bit, but primarily because the market wants to be higher. 3/4 of the time, the market is going to be higher and hit its high point in the second half of the year.
But Doug, why does it want to be higher?
The market wants to be higher because of earnings, because of growth, because of the outlook. But what's holding it back is all the noise with the China, the tariffs, and some oil news and things like that. That's the noise that's keeping it and keeping the volatility high. But behind that, if you peel away the short-term news, you've got a longer-term fundamental issue where it wants to be higher and it should be higher.
And that's what we expect stocks to trade on, like earnings forecasts, economic growth. They're big things for the Dow Jones Industrial Average. Let's turn to oil. You brought it up, Doug. To you, Michael. Energy stocks were up 1.3%, crude up 3.2% yesterday, and now you see crude trading at 72.68. Michael, to you, with the highest settlement in 3.5 years, is this a trend that continues, and do oil stocks continue to push this market forward?
So what I think is going on here is now that Iran is going off the market and the sanctions are starting to pick up, the cartel that actually dictates the price of oil is going to push it higher. So I think a few years ago you saw the price of oil go from 120 to 20, and that had a lot to do with Iran coming to market. So what you're seeing in the price of oil is a lot more to do with the rivalry between Saudi Arabia and Iran. So I think as Iran goes away, the price will most likely go higher.
Okay. And getting back to trade, Doug, you were saying that it's all about the fundamentals, but one fly in your ointment there, my friend, is all these trade negotiations. And we're seeing an upcoming deadline in July for some of these tariffs going into effect. What is going to be the impact of this going forward? I've got to think that some of this is negative for stocks, especially when you look at that Harley-Davidson story, right? I mean, here's the president essentially telling a public company, what their business model should be.
Yeah, I think it's an issue, but I always like to keep things in perspective. You have a fundamental market that wants to be higher. You have noise that's keeping it from doing that, and volatility. The volatility has absolutely increased over last year. But look, I've been doing this long enough and been talking about it long enough to when the Dow was at 2,500. So a 450-point swing now was a 45-point swing then. 1 to 2% swings are really the norm. We're just not as used to it as we used to be. So I get more concerned about 3% swings,
right.
But 1 to 2% is well within the norm of things adjusting. But that being said, buyers and winners and losers, there'll be some winners, there'll be some losers, and that's the way you need to look at it.
Well, and it's all about the context, right? You've got to know where we've been to understand where we're going. Michael, to you, before we go here, tech stocks taken a huge hit yesterday where they dragged Amazon, Google, Microsoft, Facebook, Netflix, all those stocks lower. What is the outlook for tech, and should this be a time that people start getting out of those FANG stocks?
I don't think so. Those are the growth leaders of the world, let alone our markets. So people that have had cash on the sidelines, here's an opportunity to get involved. So as growth estimates go up and inflation estimates go up, investors tend to pull their chips off the table and reevaluate. That creates a lot of the volatility behind the headline risk. So, but ultimately, growth estimates and inflation estimates are going up, which is ultimately good. So you have an opportunity to buy some of these tech stocks, some of the high flyers for the year. You can go in and get involved.
Well, with the blue chip index down 2.4% for the year now, I guess there's a lot of opportunity to start looking at stocks. Doug and Michael, thanks for coming on.
Thank you. Absolutely.